Hello everyone, welcome back to our channel. But if you're new to this channel, please click that subscribe button and your like button so you can help this channel to grow. In this video, let us talk on the upcoming initial public offering of Academy Sports and Outdoor to be listed in NASDAQ. Is it a buy or just a walk away? Academy Sports and Outdoor, one of the leading full-time sporting goods and outdoor recreation retailers in the United States, is expected to have an IPO on October 2, 2020 at price range of $15 to $17. It served an estimated 30 million customers and 80 million approximated completed transactions, resulting to 4.8 billion of net sales in 2019. ASO also had Omnichannel platform or an e-commerce, as well as physical retail stores in 16 states in southern United States, with 259 stores with size ranging from 40,000 to 130,000 gross square feet, with an average size of approximately 70,000 gross square feet. Henceforth, this company has no mall exposure. With that, it's able to weather COVID-19. In fact, at the course of pandemic, it's still able to generate a revenue of $1.6 billion. Imagine that, in 13 weeks ended August 1, 2020, compared to $1.2 billion last year, 2019, of the same period. Rounding up to a growth rate of 30% year over year, while maintaining its gross profit margin at 31%. What is cool on Academy as well is that on how they manage their expenses. Somehow, one of the reasons why they able to butter COVID-19 with consistent general and administrative expenses at $312.7 million in 13 weeks ended August 1, 2020, which is almost the same to $312.57 million it incurred in the same period last year. While net income in 13 weeks ended August 1, 2020 is $167,676,000, or an increase of 247% from $48.3 million in 2019. Imagine having a positive results at the midst of pandemic while other retail companies are declaring bankruptcies. It suggests to us that the company had solid retail presence in the market where it is operating and management that can be relied upon. Speaking of market potentials, per Grand View's research, sports and equipment market, including ball games, ball over nets, fitness or strength equipment, and athletic training equipment, is valued at $66.30 billion in 2016 to grow by a compound annual growth rate of 3.5%. Meaning, by 2025, this industry could reach to $90.36 billion market, which gives a very potential or high growth or higher room for these companies to grow. As of August 1, 2020, Academy has current ratio of 1.71 compared to August 1, 2019 of 1.24, while its quick asset ratio is 0.88, an improvement from comparative period of 2019 at 0.60. Meanwhile, debt-to-equity ratio is sitting at 3.21, a slight improvement from last year's 4.14. However, Academy isn't longer a growth stock nor a technology stock, which usually has higher debts at their early stage. Therefore, it has to maintain an ideal current ratio of 2:1 while debt-to-equity ratio of at least 1.5:1 to keep its liquidity and solvency position healthy. Therefore, even this company has cash and cash equivalents of $884 million, at the same time having a positive operating cash flow, its financial condition can be considered as very healthy due to its high debt-to-equity ratio of 3.21. But the good thing here is that they will use some of IPO proceeds to repaying its indebtedness. In this regard, its financial condition after this IPO or after this offering shall be improved exponentially. So, is Academy Sports and Outdoor Stock or ASO in NASDAQ a buy? Actually, comparing against DEX Sporting Goods Incorporated or DKS with market price of $57.13 as of September 29 closing, it seems that ASO is fairly valued, as DKS has current ratio of 1.35, which is lower than to Academy's 1.71. Meanwhile, DKS has gross profit margin in 35% compared to ASO's 31%. Observe that it's just a slim 4%. Meanwhile, debt-to-equity ratio of DKS is 2.71, just slightly lower against ASO's 3.21. While they have almost equal to total ratio with DKS and ASO having 1.37 and 1.31 respectively. Moreover, return on assets of DKS is 3.94%, while ASO has 3.66%. Meanwhile, return on equity of 15% and 16% for DKS and ASO respectively. It just tells us that ASO is within financial performance or fundamentals of DKS, which is now traded at higher price of more than $50. Therefore, buying ASO within the price range of $15 to $17 or up to $21 is fair enough, as upside potential of this stock could be around $45 to $50. In fact, my intrinsic value to this stock is $45.96 or $34.47 after considering the margin of safety of 25%. With that being said, in my opinion, this stock is a buy, though I have no intention to own this stock this month or this week, as I'm looking to another tech stock, which is Palantir. Speaking of Palantir, I have created a video on that as well, and you can check that here. That's all for today, guys. So if you like this video and you find it helpful, please click that subscribe button and your like button so you can help this channel to grow. Also, have your notification bell so you won't be missed my weekly uploads. Remember that I'm dropping a video once or twice a week, and I see to it that I cover 1 or 2 stocks that is being IPO'd within that week.